Up next, we have a young fintech leader. Recently recognized as a Young Fintech Leader of the Year and elected as the president of the Ghana Association of Digital Finance Practitioners, one who is passionate about bridging the gap between traditional finance and the future of digital solutions. He currently also serves as CEO of Jumo, Ghana, and General Manager, Africa Operations and Partnerships. Ladies and gentlemen, please put your hands together to receive Jeremy Koinu. Jeremy will give us a quick presentation on innovation in banking and financial markets.
They will roll the slides. Yeah. I think I can't put the water in. Good afternoon, everyone. It's an absolute pleasure to be here with you, and I know it's later on in the day, so I'll do my best to make use of the little time that we have to try and provide as much insights on what's happening in the fintech world by going through a few slides. So could we run the slides? Just give it a few minutes so we can get the slides up on the screen. Awesome, next slide. All right, so maybe I want to start with a few controversial statements. I'm supposed to be talking about the fintech industry and what changes it's making, but the reality is, in 2024, it's really hard to say which is a fintech company and which is not. I think back in the day, it was easy to say this is a technology company, that is a bank. But I think the lines are becoming increasingly blurred because fintech is supposed to be just the enabling of access to financial services by leveraging technology, making it faster, cheaper, or more accessible. But right now, in order for you to call yourself a financial institution or a bank or a fintech, it's very difficult to see those lines clearly. Most institutions right now are technology companies offering financial services. So those of us in the space tend to get worried if you meet a company that has the traditional IT department. If you are a bank or a financial institution in 2024 who is not optimizing for technology first and offering financial services on top of that technology, it becomes very difficult to clarify. So we are all part of the same fintech industry. All of us eventually are all going to be fintechs, and I think that's where I want to start. But the reason why fintech has taken such a prominent stage in the financial services industry is what I want to delve into, not just on the product or tech side, but even on the people side. So next slide. Okay, so this slide essentially is depicting why the advent of technology, the penetration of mobile phones has caused such a stark evolution. You can see that from the slide, it shows that Africa has the youngest population globally. So 60% of Africans are under the age of 30, and if you drill it down, about 52% are under the age of 25. If you come to Ghana, the median age are people who are 20 years old. Now these are the millennials, Gen Z, probably soon to be Gen Alpha, who are tech savvy, born into the world with tech at their fingertips. They are discerning, they know how to question and fact check everything that you say, and essentially they are digital natives. These are people who view the best form of customer service as self-service. When they wake up and they want to perform a transaction, their mindset is not to wake up and take a car and go to a bank, queue, talk to a teller who is not even having a good day, so can't, smile at them even. Their best form of customer service is self-service. They want to do things on their own. They want to use their phones. They want to access things themselves. There is a running joke by a fintech founder that I had a conversation with where he said that in 2024, in modern times, almost every household has a chief technology officer, and that person is usually within the age of 15 to 25. And whenever you need to make a tech purchase, they are the ones you consult. And they eventually also become the chief procurement officer because they know all the gadgets, they know all the techs, they know all the specs. And it's the same thing when it comes to financial services. They take a bank app and they can tell you that this bank app is not worth using, and they can tell you exactly what features are on each bank app. We did a small survey in our company where we took the top 5 listed apps in Ghana and asked a group of Harvard business students to assess the apps. And they were all very confused because in their minds, if you want to assess the quality of an app or display which features you like, they're expecting to see the same kind of features they see on their social media pages. So they ask questions like, where's the search button on this app? Where's the like button on this app? Where's the comment section on this app? Because they want to provide their feedback real time, and the bank is saying, no, we have a questionnaire. No, we can do a survey. And that just does not resonate. So it all goes to say that if you're a financial institution now and you're not optimizing for this new generation of consumer that are digital first, that are thinking in a way that is different from you, that are going to be the ones who are maturing to become 60% of your customer base, then you're doing yourself a great disservice. Because if you're still optimizing and building products and services or designing your platforms for people who are 40, 50, they are part of the great transition who are handing over to this new generation. Now let's look at what's happening to the workforce with the advent of these new emerging technologies. Next slide, please. Okay, so this is a report that was conducted and released by the World Economic Forum last year, and it's talking about all the changes that are coming into the financial industry based on the rise of emerging technologies like artificial intelligence, blockchain, cloud technology. And essentially the prediction was that in the next 5 years, we are going to see about 69 million new jobs created. And at the same time as these new jobs are being created, we are going to see an elimination of 83 million jobs. So if you do the math on a net basis, we are going to see 14 million jobs that are going to become redundant or going to be automated due to AI. Now, what they're also going on to say is that of the 69 million jobs that are created or those that remain, even the skills that are required to perform the same functions are going to change. So you could be a trader, you could be an investment banker, you could be an asset manager. The tools that you're going to need, the tools that you require, the skills that you require to perform the exact same functions or to generate the same outcomes are going to be changed and are going to be heavily technology driven. So we just came from an Agile conference where an HR lady was telling us that it's so difficult to place top talent now because whenever you identify a young person or a very experienced person who has a lot of skills and experiences and give them a full-time contract, they don't want it. They want to work part-time because they want to work for multiple institutions, right? My former boss used to say that you hear a lot of people within the finance industry talking about, I have 20 years experience, 30 years experience. But what you begin to recognize as you work with them is they have 1 year of experience recycled 20, 30 times. And now the world is moving to a point of view where they are not looking to hire people who have a number of years of experience. They want to see how many experiences per year that you have. So technology is facilitating this where you can now work full-time, work remote, work part-time. The opportunities are going to be created, but at the same time, if you don't move with the pace of change, you can see what the net effect is going to be. And primarily in the financial industry, it becomes more prominent. Next slide, please. Okay, so this was also an aspect of the survey that actually she wanted to pinpoint the fastest growing versus the fastest declining jobs. So if you look at the fastest growing jobs, you can see all of them have some element of technology clearly displayed. So now you're beginning to see AI and machine learning specialists, sustainability specialists, fintech engineers, robotic engineers, and these are all people that are within finance. Typically in banking before, you would see the traditional, accountant, clerk. Now you're seeing on the right that the fastest declining jobs are those that have traditionally been in the financial services for over the last century. So you're beginning to see that all the mundane routine tasks are going to be automated, and those are the ones that are predicted to be fastest declining. And the point of this report was not to create any kind of fear and panic, because there's always going to be a heads up for change, and there's always going to be the opportunity to redeploy talents to different areas. But it's going to be very difficult to redeploy someone when the talent or the skills that they have are just not fit for the new world that we're living in. Next slide. And this is one of the biggest challenges that emerged when a survey of the top 93 banks in Africa was conducted. They wanted to find out what are the concerns of CEOs, the concerns of general managers nowadays when it comes to the advent of technology. And the expectation was that people would say the telcos are now doing financial services. You're now beginning to see, the blockchain companies doing trading. The reality was that the number one thing that they were all concerned about was the lack of a skilled workforce. And it was primarily because of the flight of talent. Because the world has become such a global village and people have access to educating themselves, learning the newest technologies. Even in a country, let's say like Ghana, where even if you were a blockchain certified expert or a data decision science expert, which is not being used now, there's an opportunity for you now to get a job opportunity in a country or with an international firm that is actively using these certifications. So what they begin to recognize is you train people, or the people get trained, you identify this person as top talent, but the opportunity and the market for them elsewhere is becoming great because this new crop of, let's call it employees or workforce, don't want to work the traditional way. So that shows you the difference between the past worker and the future worker. Past worker is okay with a 9-to-5 corporate job, dressed in a nice suit and tie like our ACI president. But the new generation of employee wants to work anywhere on any device, wants to be able, they're not looking to become CEO at the age of 50. They feel they can do this before 35, before 40. And because of that, you need to show them that there's a clear path to where they're going so that they go and give you the 150% effort that you need. Next slide, please. And these are a result, and this is one of the aspects that has become quite clear. Traditionally, you would have seen people working in financial services with the kind of certifications that you see. Now you go into the banks, you go into the finance houses, and you're seeing that most people are no longer one-dimensional. You don't have just a specialist, you have a generalizing specialist. So you will see somebody with an ACCA, but he's also a project management professional. You see somebody who is a chartered banker, but they're also Agile certified. You're beginning to see less people who are one-dimensional because the field is changing, so they are changing and adjusting with that. And now, even in that space, you're beginning to see people with certifications such as Certified Metaverse Professional. Now, I don't think you'll go into a bank right now and see a certification like this, but what's the name? Jamie Dimon's bank. I forget the name of the bank, but Jamie Dimon's bank has lots of people who are Certified Metaverse Professionals. Exactly, JP Morgan is now looking for ways where they can take their banking experience into the augmented reality world, and that's when you begin to see these. All right, so that's just to talk about what changes are happening and how it's impacting individuals. Now let's look at an overview of what digital transformation essentially is. Are we doing good on time? Awesome, let me run through this quickly. Next slide, please. Okay, so I've spoken about this, the A, B, C, D of technology now, artificial intelligence, blockchain, cloud, and data. They are the most popular technologies that are transforming our industry. Next slide. Okay, so these are some of the global developments that are happening in our space, right? Globally, we are beginning to see the advent of AI in predictive analytics and in trading. DeFi innovations are becoming more and more popular. Central bank digital currencies, we saw that at the 3i Summit. Even the Bank of Ghana did a transaction where they show the capability of the e-city, and it's beginning to become more popular within the space. AI-powered fraud detection and prevention, even Jumo does that now, and we're beginning to see a lot more RegTech advancements. If you narrow that down to the African continent, you're beginning to see such plays. So even on mobile money platforms, now they are not just doing payments. Now you can see that they're doing lending, they're doing savings, they're doing insurance, and majority of these products are not manual. They're being handled by algorithms, machine learning systems. So yeah, I think we can move forward. So this is just one use case. I'm using Jumo, obviously my company, as a use case. And we had Letshego's chief commercial officer right here, and he was talking about how the velocity of transactions that they're able to do now was not possible 5-6 years ago because it's entirely platform-based, right? On a daily basis, we are able to disburse 60,000 loans. Now, a bank's platform was not built for that kind of velocity, so the fintechs come in to take that kind of pressure off their core banking onto a more scalable cloud-based system that allows us to generate. Across the continent, we're able to disburse 54 loans every minute. That's only 4 loans shy of having a loan every second. This is only possible because of the automation, the machine learning algorithms that are able to do real-time assertion of who has the propensity to take and repay a loan. Next slide. Okay, this is just the number of fintechs that have been introduced into the space so that the banks see that there is opportunities for cooperation, opportunities for collaboration. And on a yearly basis, this number increases, and you're beginning to see a lot more of these fintechs actually being put up by the banks themselves. So the lines are getting blurred, as we said in the beginning. Next one, please. Okay, so this is just highlighting how even the regulatory aspect of things is also catching up. A lot of the things that are being done in the fintech industry is supported by regulation. I think one of the bragging rights we have in Ghana is that we're one of the few central banks that actually has a clearly delineated fintech and innovation office that is staffed with people who actually understand the industry and have come out with policies that actually create that enabling environment. It's so difficult if you go to other markets to try and explain a technology-based product in financial services when you don't have one of these. And these are some of the policies that they started off with, along with the next slide. Yeah, just last week, we saw that the draft guidelines for digital assets had been released. We're probably one of the very first West African institutions that actually has this out now, and it's going to enable some of the initiatives like the e-money transactions and others who want to build on the CBDC or blockchain space. Next slide, please. Okay, so this is sort of looking out into the future. One of the things that has enabled financial inclusion the most is having platforms that have penetration. Now, the reason why fintechs were able to emerge was basically taking the banking suite and unbundling it. So taking one product at a time and mastering each product. So you see a group of fintechs are mastering payments, then the others are mastering credit, others are mastering insurance. So it was first a one-stop shop where the banks owned everything, and now it's slowly been unbundled. But we're heading towards a space where there's going to be a rebundling of the best products that we're seeing out in the market. And it's going to be riding on platforms that have deep penetration, like the mobile monies and co. In China, for example, TikTok is now a lender because they're able to use social analytics to predict a customer's propensity to take and repay a loan. Imagine if WhatsApp, who has about 2.7 billion active users worldwide. There's 8 billion people in the world, and there are 2.7 billion who are active on WhatsApp. Imagine WhatsApp tries to do payments, as they are doing in India worldwide. That is why it's one of the most highly contested products that almost everyone is fighting against, because they know that if they start doing lending, they start doing payments, there's going to be so much disruption in the space, and that's what we're going to see. We're going to see super apps emerge going forward. And then we're also going to see some of these banks that are leveraging augmented reality to create a better customer experience. So I think I'll close with this. This is just a short illustration. Could you play the video? Okay. So this is a concept that Jamie Dimon, JP Morgan is trying out, where they're trying to embed banking services in the kind of tools and materials that we use on a daily basis. So they're embedding augmented reality, or they're trying out embedding augmented reality in wearables like your glasses, such that on a casual basis, you can check your balance, you can see your transactions by just tracking your retina movements, and it's going to be a smart wearable device. So even though this may be a little bit far out, you can see some of the bold moves that some of these financial institutions are trying. Previously, you would say only technology companies are trying this, but these are being done by banks as part of their daily activities, and large budgets are being committed to it. All right, next slide. Next slide, please. Okay, so let me close by saying this, that the banking industry is projected to be a $10 trillion industry globally. And so far, fintech is doing about $300 billion. That's less than 10% of what is out there. So the opportunity is great. There's so much collaboration that is going to be had. We may think that we've seen it all, but we're less than 10% done. In my opinion, even in the African market, we are less than 1% done, and there's so much more that we can do. So I hope this gives you some perspective of what the potential is. It lets you know exactly how the field is changing and how close technology and financial markets are It's been a pleasure presenting to you. Hope I didn't go over time. Thank you for your time.
Thank you, Jeremy.